For more on the markets ahead of the key inflation data and bank earnings that we'll be getting this week, we want to bring in Lori Calvasina. She is head of U.S. equity strategy at RBC Capital Markets. And Lori, your year-end target, I think, for the S&P 500 is 6,600. How confident do you feel in that, given the pullback we've seen the last week or so?
So it's a great question. And we were very honest with people when we came into this year and said, look, the uncertainty factor is elevated coming into this year. I probably spent as much time talking about the bear case we put out as much as the base case. That being said, we were also very clear with the 6,600 that we expected a 5 to 10% pullback to materialize early in the year. If we get something beyond 10%, I think that target is at risk. But I think we can withstand a 5 to 10% type move. And, you know, the last few days, it looks like that's right where we're headed. We're pretty close to that 5% already.
So what are you expecting for this week? We have some big things that are on tap. First of all, CPI and PPI coming up. I think PPI first, then the CPI. Then you've got earnings season that really kicks into gear. What should we be bracing for with each of these?
I think they both matter. I was actually talking to my rate strategist about this recently. I think that interest rates and the Fed call really reverberate on the PE multiple. And that was one thing we really talked about coming into this year. We don't think with the Fed pausing, and our guys just changed their call to saying the Fed is done. Initially, they'd been saying January was the last one, but you're just not going to get more multiple expansions. So the heavy lifting in the market really has to be done on the earnings side. And, you know, we feel pretty good about the consensus numbers right now. They're at 273. My modeling is at 271. That being said, if you look back to last year, this reporting season, companies went out with a lot of downward guidance to keep expectations low. So in the short term, that's something I'm really curious to see if we get that again.
Yeah, inflation is problematic because it not only eats into the idea of the Fed cutting rates again, it eats into the consumer spending power, it eats into companies' margins. I mean, if you're thinking that earnings are going to be strong, you better hope you don't have a rising inflation picture.
Yeah, and I think, to be honest, you know, I'm not seeing it in the quantitative studies we do of, you know, word searches on costs and inflation and that kind of thing, but we read a lot of transcripts on my team, just top to bottom. There's only so much you can do with keyword searches. And the last couple quarters, we've really just sensed almost like a sneaky, you know, kind of focus on costs, like kind of focusing on it without really saying it. And if you look at 2025 bottom-up consensus expectations for operating margins in the S&P, they've been coming down since last June for 2025 numbers, and that's coincided with that kind of chill that we've observed in the transcript commentary. So it impacts the margins, and you're right, it affects these vibes. We're all waiting for the vibes to pick up and, you know, be strong in the new year, but inflation does weigh on the vibes for the consumers.
You are doubling down on financials. This was something that we've seen a lot of strength with. You had conviction in this after the election, expecting that regulatory oversight would kind of loosen up a bit. We have seen a little bit of a pullback, but you're sticking with this and saying this is a good place to be.
Yeah, and frankly, you know, I think we've seen, you know, sort of a lot of the post-election enthusiasm. There's been sort of a like, hey, let's take a breath. Let's, you know, wait and actually get some legislation, see how things pan out. But if you do think about financials, right, they're not so caught up in things like tariffs, and it's really more of the regulatory backdrop. So I do think that's a strong tailwind for this year. And frankly, Becky, I never liked financials when you go into reporting season. They've been doing well. I like them a little bit better when the froth has come out a little bit and the expectations are a little bit lower. So I don't mind this setup right now.
I was a little surprised to see you downgrading energy to market weight from what had been an overweight. I mean, we were just talking about how WTI is at the highest level we've seen in 4 months this morning.
Yeah, and really this dovetailed with some survey results we did with our analysts. And the last couple, we do this survey once a quarter, and the last couple quarters, our analyst enthusiasm has just come down a notch, and it's been kind of more middle of the pack to lower end. If you look at my utilities analyst, very high enthusiasm. We asked 5 different questions in the survey, and I think on 4 of the 5, they were at the top or second. And so the enthusiasm was really just coming through. I kind of talked myself into this overweight back in December when I was marketing with European and Canadian and U.S. investors, and it just came clear to me there's not great valuations, but really strong earnings. There's the AI dynamic, and they're really politically agnostic. They don't really get caught up in tariffs or tax or anything else. Right. So I don't have to solve for what I think is going to happen in Washington. Plus, I've been looking for this 5 to 10% drawdown, and it's an area that really gives us some of that defense. So we had to move energy down because we really only tend to overweight 3 sectors. There are a lot of things we still like about it, but frankly, Becky, I've been sitting on an overweight for a long time that didn't work, and I kept expecting the geopolitics to bail me out and kind of give me that risk premium and bid the space up. So, of course, it's doing it right as I've upgraded it. I'll take it. But look, the reality is I was talking to one of my analysts right before we did this downgrade, and we said these geopolitical issues do come up, but they do tend to be kind of transitory. So we're trying to think about the whole year. I'll enjoy this trade while it lasts, and, you know, I'll take my licks on the bad timing.